Okay, guys, here's a quick video update again. So first of all, we have the auto index, the ratio chart of auto index with Nifty, and we look at the long-term chart, the weekly. Here we can find, I have mentioned this earlier also, here we can find if we draw a trend line connecting the lows of 2008, which was a major market crash, and also the low of March 2020, which was a COVID crash, another major low, then we get this trend line. And currently, you can see we are just about there, bouncing from there, taking support there. So the auto index, despite all the fundamental bad news that you have been hearing on television, etc., is actually as per chart at a long-term support, and it should do well from here. Even if we look at the RS chart of the auto index, you can find here that on the RS line also there is a breakout. RS has gone well above zero, and also the index itself seems to be forming kind of a inverted head and shoulder, the auto index. You can see it more clearly here. See this auto index, and it's forming an inverted head and shoulder, and it's done a breakout, right? And also we can see the relative strength line is above zero given a breakout. So auto index clearly looks strong from here. Now what else? So I had earlier given an indication that metal index had topped out and we should get out of it, and the view has so far been playing out as metal index has been clearly underperforming. Now I think the similar thing might be happening with the pharma index, because if you look at the pharma index ratio chart with Nifty and you draw a trend line connecting the recent lows, that is basically the pharma index started outperformance from November of 2019. That is when the pharma index came back in flavor. Before that, pharma was not doing well. And post-COVID crash, we saw the real bump up in pharma. So if you draw a trend line connecting the lows since the pharma index started outperforming recent, then you can find that clearly it has now broken that trend line support, right? You see this trend line? And now we have broken below that support. So this indicates weakness in pharma to come. And also if we look on the RS chart, you can find that the RS line has given a breakdown, gone below zero, right? So pharma index is another index we want to be getting out of pharma stocks, just like we got out of metal stocks. The other thing I wanted to highlight is Bank Nifty relative to CNX IT. So this is Bank Nifty ratio chart with the IT index, because typically we know that both of these move in the opposite directions. When IT is performing, banks typically do not perform that much, and when banks are performing, then IT does not perform. So there is a inverse correlation between the two indices. So we can very well look at the ratio chart to try and understand the relationship. Here also we look at the weekly chart, the long-term picture, and you can find here that this ratio has not, Bank Nifty to IT index ratio has not gone below this blue horizontal line support from May of 2007. So only before 2007, when there was a big IT boom, was the time when this ratio had gone below this horizontal blue line here. Post 2007, it has never broken below this uh, blue horizontal line of support, right? So this is a major long-term support that we have here on this ratio chart. And here you can see, if you come down closer to where we are right now, here you can see that we are bouncing off exactly from that support. So this seems to indicate that Bank Nifty should outperform from here and IT should underperform. So IT stocks might be another category of stocks that we want to now be getting out of. Also, if we look at CNX IT relative to the Nifty 50, then we can find that it is now finally also breaking down below the moving average, right? The short-term moving average. So IT also, we can take a look on the RS chart. So on RS chart also, we can see that the RS line is now gone below zero. So IT, pharma and metals are indices we want to stay out from. stocks that we want to stay out from are IT, metals, and pharma. And we want to look for only short opportunities in those sectors. And sectors that we want to be long in are autos, banks, and realty. So realty and banks we've already discussed in the past a few times, in the recent past. So I will not go into that. I'll just talk about a couple of auto stocks that I'm really liking at this time. So the first is Bosch Limited. So you can see this is the trend line from the highs of 2017, and we are just breaking above that trend line. This is the support trend line, this is the resistance trend line, and we are just breaking above the trend line as far as Bosch is concerned. If we also look at Bosch relative to the auto index, then also we can see, and we go to the long-term chart, on the weekly chart, we can find that the previous bottom of Bosch relative to the auto index was made here in 2010, and we had come to similar levels now, and we are bouncing from there. So now if we come down to the recent picture by going to daily chart, we can see that repeatedly Bosch has been taking support relative to the auto index near this horizontal blue line. So this is a nice bottoming out process. It's a bottom formation process, and now there is a breakout. If we look at the line chart, we can clearly see an inverted head and shoulder also forming. Breakout has not yet taken place on this, but you can clearly see that an inverted head and shoulder is forming in the Bosch price chart. Breakout will be confirmed above 16,700, but it looks to be just a matter of time, and the target we will get will be the distance of this peak to the trough, that comes to 25,000 on Bosch. The other stock that I'm finding interesting is Maharaja. Again, been a huge underperformer, and here also you can see similar characteristics as Bosch. So it's kind of an inverted head and shoulder breakout that we are getting here. So 744 minus 665, we get 79 rupees. If we add that to 744, we get our target, which comes to 825 rupees. This is the first target. First we pay for this, and then we will revisit what other pattern is forming and what is happening on the chart. And we'll take a call if we want to continue playing long in a Maharaja for bigger targets. This is the first basic target of this inverted head and shoulder breakout. In this case, the breakout has already happened. In the case of Bosch, the breakout is yet to be confirmed. It looks to be only a matter of time, given that the ratio chart with the auto index is at a long-term support and done a bottom formation process. Okay, and you can also take a look at the RS chart of these stocks. So as I said, in case of Bosch, breakout not yet happened. So RS line is below zero, but you can see that it has started trending upwards, and breakout we can confirm maybe by breakout above this trend line or breakout above zero. By that time, this inverted head and shoulder breakout would have also taken place, and this target of 25K will become active. That is for Bosch. And if we take a look at Maharaja, so Maharaja also currently trading below the zero line, but again, you see here RS line is on the verge of giving a breakout and quickly maybe coming up above zero also. So this is the RS chart of these two stocks. So this is my small video update I had for you. Hope you like it, and I hope you benefit from the views. Thank you.